Hi friends, Simit here from InformedTrades.com. Today is February 17th, 2014. Time for our daily Forex chart review. For those of you who are just joining us, this is basically something I do every trading day. I review the Forex charts the way I see them, the trades I'm placing, any additions or updates I'm making to existing positions I have in the market. All part of the learning process. If you want to learn more, if anything I'm talking about doesn't really make sense, we have a whole bunch of material on InformedTrades.com that covers well beyond the methods that I'm using in other markets, things like that. Definitely check it out, InformedTrades.com, register, join, participate in our learning community. Okay, so let's get started taking a look at some charts on the screen in a moment. There we go. This is something I drew up over the weekend and posted on Informed Trades about it. This is a Bitcoin chart. I don't really trade Bitcoin, don't really recommend, or I'm not a big fan of the idea. Basically, it's got a lot of liquidity issues. The technology has had a bunch of issues, so the price can be very volatile. Some people may say, oh, that's a great way for me to earn on the upside, which is true. But you could also, the thing I love about the Forex market in particular is it doesn't really matter how volatile an asset is, because if you want a lot of risk, you can just put on more leverage. So dollar Singapore is an example of a trade or a currency pair that's very low volatility, doesn't move much. But when I trade it, I put on slightly larger positions than I do if I were to trade a more volatile asset like pound Swiss. So basically, you can, through a combination of position size and leverage, you have greater control over how much risk you want to expose yourself to. So asset volatility is not really an issue. Anyway, that's a long, convoluted tangent there. But I thought the price action here was interesting. Bouncing off the 200 exponential moving average, we see a major support level here. Price has been consolidating a bit. So this might be, from a purely technical perspective, this could be an interesting level to buy at, especially if we can fall back to this support level here. I won't be doing that. I just thought it was an interesting chart worth highlighting, especially because Bitcoin gets a lot of attention these days. So let me actually go to the Forex charts that we normally look at. I saved Forex charts here. Oh. Okay, it should be coming up. Just a second there. So right now, just to recap at the moment, and those of you who are used to watching or familiar with how I conduct these videos, I always start with pairs I have on at the moment. So right now, I just have a euro pound position on, no other positions on, and my stop is at break even. These charts are a little slow today. Not sure exactly what's going on. Let's see if we can get it here. Okay, there we go. So you should see this chart on the screen now, euro pound. Okay, so initially my target profit was this green line here. However, now I actually am moving it. I'd rather target the bottom of this price channel here. And what I'm going to do, still experimenting with, oh, I didn't mean to move that. I'm going to draw a middle line as well to the channel, and we'll make that, how about a brighter color? I'll make that red, I think. Okay, so I think I will, if we close above, right now we are below this. If we close above that red line, yeah, so I may close it today. If we right now we're at 81.91. If we close this candle above that red line, I will close out my position and take a profit. came very close to touching this green line. In any event, looking at the other pairs, I would like to hold on to, what happened? Oh, I don't think, let me just make sure that red line stayed. Yeah, I didn't save it. Make it a little thicker. There we go. Okay. If we close above that, I will close it out. Ideally, I would like to hold on until this reaches this purple line down here. But we'll use the middle of this channel as a gauge. Okay. So that's that. No real action to take on Euro Pound, basically, but perhaps something to do tomorrow. Euro Australian Dollar. Okay. And this is, I have a order on here to go long. I'm pretty sure I have an order. Let me check. So now that was the only trade I have on at the moment. Let me take a quick look at my existing orders. Yeah, so I don't have Euro Aussie, but I have Aussie Swiss, which is basically the same thing. And those orders haven't gotten filled. Euro Aussie, if basically idea is if it hits this black line here, that could be interesting. Euro Canada. Okay. Euro Canada. That is yeah, so and I mentioned this repeatedly, you know, it looks like it's going to stay above this price channel, and some traders, especially looking at these candlesticks, would have loved to buy right here. Personally, for me, horizontal lines trump diagonal lines. I don't like to enter on a horizontal line as support, but definitely would have worked out well in this scenario. So we'll see if it falls back to that black line where the 50 simple moving averages and the 50% Fibonacci retracement. There's a lot of confluence going on right at 48.20, right around there. So we'll see if that ends up anything. Euro pound, we look at Euro yen. Okay. And I've got an entry order here, Euro yen, to go long at 137.80. Yeah, 137.80, and you can see the red line is the stop, the black line or the green line is the target profit. This is based on a weekly chart, so we'll see if the yen gives me the pullback I'm looking for. Euro Kiwi. Okay, this is interesting. I mentioned that, I would like to see the 200 exponential moving average converge with this blue trend line here. If we can see that, then I might be interested. This looks like interesting price action here. We're seeing a lot of consolidation. I may put an entry order on Euro Swiss or Euro Kiwi. Excuse me, Euro Kiwi. But the reason I mentioned Swiss, or why I had that on my mind, is I'll also compare this with Kiwi Swiss, NZDCHF. Should be very similar price action. The two are going. Euro and Swiss are basically the same. I mean, they move very, very close together in sync. That may not always continue, but I think it's useful to look at the two of them. When I'm looking at a Euro pair, I'll also look at the Swiss against that same currency. So I'm looking at Euro against Kiwi. I'll look at Swiss against Kiwi, and see if if they're similar enough, and one has a technical pattern that I like a little more than the other. Okay, so possibly something on Euro Kiwi today. And that brings us to Euro US dollar. Okay, so we're outside this. This is a major level we're at here, this black line. We're now above the 50 simple moving average. We've broken out above this. We haven't closed above it. Let's see if we can do that today. This might still be a little range bound in the opinion of some. You could argue that it's going to come back down here. Personally, I wouldn't take that trade. I wouldn't trade either way, long or short. It needed to fall back a little more. The opportunity to buy was here, and I discussed that, but I traded it by the pound. I thought pound dollar was better, and that worked out well. Okay, so speaking of the pound Australian dollar. Okay, yeah, still, a lot of it just waiting, and I can flip through these charts in a reasonably quick amount of time, just because if it's not at support or it's not at the level that I'm waiting at, then it's sort of time to move on and see if it ever gets there. At some point, I'll be redrawing these lines, but the way price currently is, I really want it to fall to at least 82.70 before I can even consider doing anything, and more likely is 79.60. Actually, that's not entirely true. I should probably move this line up to here. That's a more meaningful support level. So if it can fall to 81.43, I think I would just delete this line for now. Yeah, you could also argue, what was the line I just had on? We'll see, somewhere around there, but in any event, it needs to pull back a little more. Pound Canada, it's going to look a little bit similar to Euro Canada. Okay, yeah. So you can see it broke out of the price channel, came back to test the top, and went up again. So for those traders who saw, hey, this is coming back to test the price channel, really nice candlestick to suggest, and this is an opportunity I should have taken it in hindsight, of course, always 2020, but it touched the support level. So that was a valid opportunity, even in my perspective. But live and learn, always need to improve. A lot of this is, having the right strategy is one thing, but executing it that's really, you need to be able to execute it consistently. So still working on, optimizing my strategy and improving my execution. Improving execution is largely a psychological thing, as well as a lifestyle thing. So I used to trade the 4-hour chart, but it was hard for me to look at the charts at the times that I needed to. So daily chart, I can get into a nice routine that works very well for me, and do these morning videos as a part of it. Pound Swiss, okay, so still, hovering in this range, in this channel. If you can go to an extreme, top or bottom, I may do something, otherwise I will continue to pass. Pound yen. Okay. This is interesting. We have now, it looks like, we have a doji at this 61.8 retracement level and the 50 simple moving average. So this looks a little bearish to me. Price went all the way down here, retraced, and now we're here. So this looks like it could head down, which would be good for my euro yen. We don't want to head down too much, but basically need to come back closer to here, and then I'll get filled on euro yen, and we can go from there. We'll see. So yen looks like it may be getting ready to reverse, at least against the pound. Pound Kiwi. Yeah, this is similar to the euro pound trade I have on. No, it isn't. No, I was thinking of pound Swiss. Okay, pound Kiwi. What happened here? I need to extend this. There we go. Okay. Yeah, if it can fall to that, black line, 197, that could be interesting. Another trade I should have taken back here. I kind of felt a little reluctant, to trade it within this range. So we'll see. If I don't feel good about it, then I'll stay away. Especially some of these crosses can be a little more volatile, and that throws me off a bit. But That's something I'm still working on. It would have been, in hindsight, we can clearly see it would have worked out. But this, and then there's the issue of stop loss placement. I wonder if I would have gotten stopped out on this candle. I think with this particular trade, it may have been hard to find a good reward risk, and that was probably why I passed. So this setup looks good, but then in terms of where to put the stop relative to where to put the target profit, that was probably why I didn't take it. Okay, pound US, that ties into something else. It doesn't always look. I'm going to start deleting. This was just to finish my thought. A setup you can see an entry opportunity, but that doesn't mean you should take the trade, because you have to measure where you would put your stop relative to the target profit. And if that's not really favorable, then you may not want to put the trade. And then I think that was what happened with me in pound Kiwi. Okay. I'm going to start deleting. This was pound dollar is still my favorite trade of this one in particular, where I entered here. And I got out here, in hindsight, and could have gone out a little bit better. But in any event, this was a really nice trade, clear setup. I'm going to delete these text boxes, though. Delete. Okay. Okay. So in any event, now we are waiting for a pullback. Let's see if we can. There may be an opportunity to trade a Fibonacci here, or at least get some perspective that way. Here we go. We'll start from this swing low, which is where I entered at last time. And if this is the top, okay. And so now we may have, yeah, this would be an interesting. Okay. So let's see if we can pull back to here. There's a support level here, and a 50% Fibonacci confluence at around 65.50. So we need 160 pip pullback. That might be an interesting trade to put on. We'll see. So that's pound dollar. Nothing yet, though. We just exited that, and now we need to wait for the pullback. Let's go to the US dollar. Okay. I'm excited. I mentioned this last week. I'm excited about this. If we can fall to 109.04, I think that could be a really nice buying opportunity. It's a clear chart. Price is clearly trending upwards if you look at it from a daily chart perspective. And now we're getting a nice pullback to, if we can pull back, what's that? Not that much further. Wow. This level here is 109.04. And right now we're at okay, so about 50 pips, 53 pips. If we can get 60 pips, that'd be a little nicer. But this moving average is creeping up into that vicinity. We have a 50% Fibonacci retracement right there. So let's say 60. If we can get 60 pips, that would be really nice. And then we start seeing some reversal candlesticks, and that'll be a great opportunity. So definitely keeping an eye out for dollar Canada in the maybe later in this week. We'll see. Don't want to jump the gun either. Dollar Canada now. Dollar yen. Okay. This is also looking pretty good. Dollar yen. Is it time to go long? Let me zoom in a little bit. I know I was thinking of whether I found the candlesticks to be sufficient. Let's see what it looks like on a 4-hour chart. Sometimes when we zoom into a time frame, we can get a clearer idea of what the market is respecting. Okay, we did see basically a doji pattern here near support. Let's go back to the daily. Yeah, I think this is a interesting opportunity. Okay. The stop is going to be really far out. So we'll put the stop about 230 pips out. So we would want at least target 109. When was the last time we were here? We need to go out to the monthly chart. Okay. So I think what I'm going to do with this one, because I'm very interested in a long-term trade on the yen, we've talked about that repeatedly on InformedTrades. InformedTrades.com/Japan. That will give you an idea of all the arguments over the long term, very fundamental arguments for being bearish on the yen, which would mean bullish on dollar yen, or bullish on CAD yen, euro yen, all the other pairs. Basic idea is, if you have that perspective, you want to have a high target on the yen. We've talked about, Kyle Bass says yen 360. John Mullen says yen 150 easily. I think those numbers are realistic. And that may be something that I want to trade at this moment. I think this is a good way for me to trade it. This level here. Oh, that's the wrong. Let me delete that. A horizontal line and put it right here. Oh, not right there. Okay. There we go. So that will be targeting basically 2100 pips, risking about 250. So it's a 9-to-1 reward risk or so. That's a good opportunity for me. And I'll put this trade on long dollar yen. Now it's going to be a relatively small position size because the stop is further out, but a very long profit target. So that's something to consider when you have a trade that you're going to hold for a long amount of time. Remember, you are also tying up capital for that amount of time. So, if I'm basically, the money I invest in this trade is money that I cannot use somewhere else. So that's something to consider about, especially for swing traders. If you're holding trades for days, weeks, if you're going to be holding money in for a longer duration, you kind of need a longer return to compensate you accordingly for the amount of time your money is being tied up. So that's something I'm considering in exchange for that, and that's why I really like position targeting or percentage-based stop loss, because I have my stop further out here. I'm always going to be risking 0.25% of my account on each trade. So because my stop is further out, I'm still risking 0.25%. It's going to necessarily be a smaller position size, right? I can basically put it another way. If I'm only risking 10 pips, I can have a larger position size than if I'm risking 100 pips. If in both instances, if I'm saying to myself, I only care about not risking more than 0.25% of my account, I can do that. I can risk 0.25%, and if it's a 10 pip trade, I'll have a much larger position size than if it's a 100 pip trade. So in a 100 pip trade, I have a smaller position size and risk 0.25%. Now the other side, or the other component to that, is time. So if you're only risking 10 pips, chances are 99 out of 100 times, small position size means you're probably going to be in and out of the market quickly, or you can move your stop to break even kind of quickly. Whereas longer stop, if your stop's further away, you may need more time. Your target profit's further away, you need more time. So you need a smaller position size, and that way you're not paying too much of a for your capital being tied up. I hope that sort of makes sense. You know, a lot of these things, if I'm saying things that kind of don't make sense, it might be easier if you comment on InformedTrades, share your thoughts there, and we can hash it out in the discussion there, get other members involved. Okay, so I'm putting on a dollar yen trade. We'll probably come back to that at the end of this video. Dollar Singapore. Trading can be very, and one of the things I like about trading is it's very mentally exhausting. You know, you always need to be on top. Oh, dollar Singapore, look at this. Okay. Huh. Well, this is definitely a key level. Now, price action is a little, let me zoom out. I don't know if I zoomed in too much. I had mentioned that this wedge was throwing me off, and it is kind of throwing me off. Huh. Because now you could argue that we have a pattern of lower highs in place and a pattern of higher lows. So we're in this wedge, and now we're right in the middle of it. Yeah, I think I would prefer to pass on this. And like I mentioned, you know, I'm not putting on a trade unless there's a good reason to put on a trade. Or if there's a reason not to, then I'll avoid it. And right now, the reason not to is that the trend is just not super clear. You know, we're still, the market is, we have a pattern of lower highs for sure. You can see that right here, right here. So it fell to the bottom here. That could be really interesting. I think, you know, we have a pattern of higher lows too, or lower highs, excuse me. Right here, you know, this high is higher than this high. So I think this wedge is a legitimate way of viewing the market. And in that instance, I want to wait till the top or bottom. So I will pass on dollar Singapore. The price action here, we are at a major support level, and the candlestick does look interesting. It's good to enter on a, you know, basically if you see a big, I'll just zoom in a little bit because there are some noteworthy elements of this chart that I want to highlight. Okay, so if you see a big candle down to a support level you previously identified, if you see a big move that runs right into it, and then we see some consolidation, especially if this consolidation goes over 2 or 3 candles, you know, if we get another one like this, that's a great, and some traders may want to wait for another one, although sometimes you can be pushing your luck a little bit, but those are the best opportunities, in my opinion. However, like I mentioned, this support level is a little bit in question because I think it looks like the wedge. The wedge is the dominant pattern that I'm seeing here. So we'll see if it can fall to the top or bottom of that. Okay, so that's dollar Singapore. Now let's go to Aussie dollar. Oh no, Canadian dollar. Canada Swiss. This is similar to Euro Canada, right? So yeah, just like we saw, break out of the channel, tested it. Now going back down. If we can go back to this level here, we can go to this orange line too. That'd be interesting. I'm going to make this black. And I'll make it solid, a little thinner. But yeah, if we could go back to that black line, that could be interesting. We'll see. For now, though, nothing. Canada yen. Okay, Canada yen. Yeah, so now we're back above that major support level. That's I'm seeing more signs of more reasons to be bullish on or bearish on the yen. So that favors my euro yen. Well, not my euro yen trade because I haven't gotten filled yet. It favors my dollar yen trade that likely will get filled. We're very close to that. And we talked about it a bit earlier today. So I'm going to pass on this. The price action, I just like the price action on dollar yen more. So I'll pass on Canada yen. Sometimes if two currency pairs are showing the same idea, or you know, if I can short the yen against dollar or against Canadian dollar, and the price action I like more on the US dollar, I'll just go with that pair. That's also another way I found of mitigating risk. I like to be really confident in the trades I'm doing. Okay. So that's the Canadian dollar. Now let's go to the Australian dollar. Okay. Yeah, if we can fall to the bottom of this price channel, I think that could be interesting. I'm going to delete this box. There we go. We've clearly broken out of that range. So in some respects, this would be a breakout trade. You could buy at this black line here. I'm still not as comfortable with that. I prefer really the swing opportunities. If it can follow the 200 EMA, that could be interesting. This gray line here. We'll see. In any event, right now, I don't see much. In this type of instance, if we can get candlesticks to show a clear reversal pattern at some point, that'd be very nice. Aussie Swiss. Candlesticks are a big part of my analysis. A lot of Forex traders like candlestick. So I always like to see, especially if I like to see more evidence, candlesticks is the first thing that I would like to see as that type of evidence, my favorite type. Okay. So Aussie Swiss, we talked about this, Euro Aussie as well. My entry order's still on, so we'll see if it gets filled at that black line. Other than that, Aussie Yen. Okay, this looks like it might be getting ready to. Something's going on with the yen, and I'm comfortable. That's why I like it more from the weekly chart. But we're seeing this. We saw this on pound yen as well, where it's all the yen pairs are showing this major low here. Now we're running into some type of resistance level, and it may be clear. So what I'm hoping for, basically, the short idea is that it pulls back, perhaps or right around here, maybe not. Depends on what currency pair, but gives me some decent pullback. Then I get my order filled, and we're off and running. Euro yen and dollar yen are the pairs I'm trading that against. We'll see how that goes. I like the patterns there more than this is a little bit like pound yen and Canada yen. Okay, Aussie Kiwi. And yeah, I mean I have this order on as well, so we'll see if it gets filled. And it may still get filled. It's still valid, I think. Usually, I'll put an entry order on, and it gets filled within a week. I'll consider that to be legitimate. If it goes longer than a week, I may want candlesticks to come back and reaffirm. Candlesticks are a great measure of time for me. So for me to basically, if it goes more than a week, I get a little concerned the pattern is no longer valid. But if the price goes back to the levels that I identified, and we start to see candlesticks suggest that bulls or bears are coming in, then that can be interesting. So basically, my entry orders on Aussie Swiss and Aussie Kiwi, more so Aussie Kiwi especially, are probably going to expire soon. Later this week, and that's fine. If it goes back to those levels where my entry order was at, I'll look to see what the candlesticks are like, and perhaps it'll be another shot to enter there. Okay, Aussie dollar, US dollar. And I'm just going to, the mistake I made here, there we go. Okay. Now, is this something that I want to, This could be a shorting opportunity here. And I tried shorting Aussie dollar last week. I stopped out on it, but that was a bad trade on my part. I put the stop. I misplaced the stop basically. We'll see if we get another. If we get one more candle like this, I could be interested in shorting. The trend is clearly downwards here, right? I don't really think we have much evidence of a. I'm wondering if I should short now here. Let's see what it looks like on the 4-hour chart. Let's go back here. Yeah, I mean, okay. Okay. So I think basically what I would do is something like this. Okay, 70. So I'm risking 65 pips here. And I could target. Oh yeah, this is nice. I'm good about 400. Okay. Okay, so I'll probably try shorting Aussie dollar again, and that's the enter at that black line 90.69. We'll see if it gets filled. Okay. I mean, I just think it's we're at this is support level. It's legitimate. Had a good pullback. Basically 100% retracement, which is still fine. Trend is clearly downward, so I don't see a reason to. I see all the things I'm looking for. I see. I guess it'd be nice to have candlestick confirmation, but we got that kind of on the 4-hour chart. Okay, so that's Australian dollar. Going on to QE. Okay, I'm keeping an eye out on this as a counter trend opportunity. Let's see what it looks like on the weekly chart. Is the weekly chart bearish? No, weekly chart's still bullish. Okay, I'm not keeping an eye out. I take it back. If the weekly chart was bearish and the daily chart was bullish, and we started to see a reversal pattern on the daily chart, then I might be interested in shorting. But nothing really of interest here. Kiwi Swiss. Yeah, this is just like Euro Swiss, or Euro Kiwi, excuse me. It's just in that range, not really doing much. Gonna pass on that. If it can go to the top or bottom, then let's talk. Until then, Kiwi Yen. Yeah, nothing really here. This is the same. We're seeing that reversal pattern, across the board on the yen pairs. So yen may be getting ready to give that opportunity again. It looks like yen is going to rally, or all these pairs are going to decline, and that's kind of what I was looking for. It gives a buying opportunity right around here for those who want it. I'm going to play that dollar yen and euro yen. and Kiwi dollar. Oh, okay. Huh. This is also interesting. Yeah, I mentioned that, Kiwi dollar, so I got in here, and now it looks like a reversal opportunity as well. So this could be a good range to trade. Okay. Huh. So short NZDUSD. Okay, I identified a bunch of opportunities here. Let's make this black. That's a good level. Okay, so we'll short at 83.70. Our stop is going to be right here. Oh, out there. Okay, and our target profit will be the bottom of the range, which is right here, 80.93. Yep. Make this, now we can make this green. Okay. And part of what I might do actually is yeah, I think I will enter half at 83.75 and another half at 83.95. So in all, so basically 1/8% of my account balance at 83.73, and then 1/8 at 83.95. So smaller positions, both close together, gives me a little bit better reward risk, a little larger position size on the last one. Get out a little extra of it if I can. I usually don't do that. Usually I just go to the same level, but I thought something. I saw, the actual, it could go back to here easily. So I thought it'd be reasonable to split it up that way. I don't enter our market orders anymore, but both these are entry orders. I thought it made sense. Okay, so short Kiwi dollar, that's one trade. I really identified a bunch of things here. My euro yen entry order expired. So basically we're looking at 5 pairs: euro yen, euro kiwi, or euro, yeah, euro kiwi, dollar yen, Aussie yen. Euro kiwi is probably the weakest link. And I also have 2 Aussie entry orders on filled. So not all these orders are going to get filled. And one might get filled before the other one does, and it gets stopped out or profit target hit before the other one. So I'm not too concerned as long as I don't have 4 on at the same time. Yeah, Euro Kiwi, we're going to cross that off as the weakest. So we are, okay, so short Aussie dollar, short Kiwi dollar, long euro yen, long dollar yen. Those are basically the 4 setups. I'll have this all blogged on InformedTrades. Just to recap, let's go to euro yen. Okay. So enter at this black line, stop at the red line. That's euro yen. Dollar yen. Enter at 101.30, stop at 99.21. We're gonna have our take profit is way off the chart, all the way up at 120 or something like that. We'll zoom out to the monthly and we'll see it. Now, chances are, even though that's going to, I mentioned it's going to tie up capital a little longer. The thing is, I'll be able to move my, if we can just clear this high here, maybe even sooner, I'll be able to move my stop to break even. So, in that instance, once you can move your stop to break even, your capital is no longer really tied up. That's the way I view it. So the capital, even though if you can, there are scenarios where you can have a profit target that's far out, and you can move your stop to break even, and you sort of get your initial capital back. It's not getting your initial capital back. It's a little inaccurate way of phrasing getting your initial risk back. That might be a better way of saying it. Okay, so euro yen, dollar yen, Aussie dollar will be shorting, and right there, and Kiwi dollar also shorting. I'm glad we're seeing the Aussie Kiwi short pair showing up. That same correlation gives me a little more confidence in the viewpoint. Oh, this line should be black, and we're going to split this up into 2 orders. Okay, I'll have this documented on my blog on InformedTrades. Any questions you have, anything you want to add, join us at InformedTrades.com. Thanks and best of luck in your trading.